May profits be upon you. I hope your trading week was better than mine. I had that last week was up and down. And we know that losses come with this territory, right? But with good risk management, we can minimize our losses and allow our winners to run, right? So that we end up profitable at the end of the week, at the end of the month, at the end of the quarter. That's the way this works, okay? Now, what do we have? What are we looking at ahead? I would normally, look at the old dashboard on my FX, and we'll look at the economic calendar for this week coming. And there's not the high impact news items that will throw us off. Just be careful. Just be careful that you want to be careful around the times of the announcements. But what are we talking about here? Unemployment rates and whatnot for pound. We got the RBA meeting. We got FOMC members talking. We have FOMC on Wednesday. Just things to be careful of. All right, but these aren't like the CPI last Thursday. That was high impact. All right, we got jobless claims and all that kind of stuff. You just want to be careful during the times that the announcements come, so that you don't get caught with a sudden jerk in the markets, right? But those items are not the kind that reverse markets like CPI or NFP. Those kind of numbers, and interest rates, those are the kind of numbers that turn things around. All right, so you want to be careful of those, right? What we need to be aware of, and will be the theme of today's analysis, is war. All right, if Russia decides to invade Ukraine, that's going to turn the markets around. All right, and there'll be a flight to safe havens. We'll see gold and the like start to spike. All right, we'll see oil prices rise. But what we're going to do is concentrate on the technical analysis here, and we're going to go through a bunch of markets, but we're not going to spend a lot of time on it, because it's going to be, if Russia invades, price will do this. If Russia does not invade, price will do that. That's going to give us some clarity, but we got to let the markets tell us, show us what its hand is. All right, we're going to find out who's in control, demand or supply. You just have to let the markets cook. All right, and just react off of the movement of price action. Okay, we're going to start off with the Dixie. All right, we always start off with the Dixie because it's like a bellwether for the rest of the markets, right? When you have a strong USD, you tend to see strong trends in the other markets. When you have a weak one, the same way. All right, this is the universal, the currency of global commerce. So, it's going to move the markets, weak or strong, right? So what do we see? What do we want to notice? What we want to notice is things like, we didn't make a new low here. We made this double bottom here. Very good. We broke that high. All right. That indicates strength in this market, right? And we see the currency pull back, push, pull back, and push, breaking those swing highs, all denoting good strength. This is on the weekly time frame right now, right? And we can see, I should have pointed out, was that price hit this supply, and the supply was like that. All right, I refined it to this, and we see that we have once we reach this POI, this point of interest, we see that price took a very bearish turn. All right. But what we have to keep in mind is higher high, higher low, higher high, higher low. Right. That's the trend. All right. This was the higher low. This was the higher high, breaking this high. Right. What are we making here? Are we establishing a higher low just to make a higher high? That's what we're looking at. You understand? The directional order flow, right? Let's go to the daily here. I'm sorry. All right. We can see that we took out these highs here for liquidity after we made this run up here, right? Great. Price pulls back. This is the correction, impulse, correction, and I'm looking for another impulse. And what do we see here? All right, if we look a little closer, we see 2 days of bullishness. What is this one? This is that core CPI data that came out that moved the market, all right, bullishly. We ran into this demand zone and we reacted bullishly. What is this? After the announcement that by the Biden administration that Russia may invade, looks like it's imminent. You see that the USD gained some strength against the other pairs. So in this Dixie basket. All right, so this is the hint. If Russia invades, we're going to see a continuation of this bullishness. We're going to see the USD gain strength. All right, that's the bellwether. I hope you can follow what I'm saying. Now, I'm going to go to the next market, which is EURUSD. And we see the direct inverse of the Dixie, the dollar index in the EURUSD. It does exactly the opposite, or supposedly does exactly the opposite of the Dixie, the US dollar index. Now, when we see the US dollar make a higher high or a lower low, we should be seeing the exact opposite on the US dollar index, right? We should see the exact opposite on the EURUSD. Now, this is something I want to point out to you, all right? If we go to the weekly, we can see that we've been moving bearishly, right? Just the opposite of the US dollar, right? And we see that price came into this low, all right? We have this swing low, we have this swing high, all right, which is a higher low, just like the Dixie made a lower high, all right? We see the breaking of that swing low. So we are bearish, right? We see this very bullish candle here. It's a weekly candle, very bullish week, all right? But this is where things get interesting, all right? We come up here and then price actually breaks this high. Price breaks this high, takes the liquidity up here, and we see the subsequent decline of this pair. We can call it a higher low to make a higher high or something. You know, that's what we're calling it on the US dollar, right? I'm sorry. I'm getting you a little confused because I'm confused. All right. So we make the low. We break the high. This is actually a higher high here. That is it actually broke that high, right? Creating this bullish engulfer. All right. But in this sequence, we're looking for price to do what the opposite of the US dollar index, right? Make a lower high, not breaking that high and coming down to make the lower low. Just think about it now. This was the swing low. We broke that swing low, right? We broke that swing low here, and we did not break that low, unlike what the euro did. We found the support here in this this bullish order block here, and we're starting to move up. Sorry about the squiggly lines. But in the euro, we're doing exactly the opposite. Now, what does that tell you? There's underlying strength in the US dollar. There's underlying strength in the US dollar. We broke this high here, all right, in the swing, with this swing high. We broke the swing high. What does this mean as far as Euro USD? What I'm going to tell you is this. If price continues, I mean, not price, if Russia goes to war, Russia invades, well, we'll be looking at price continuing down with US dollar strengthening and dragging the euro with it. All right. If Russia does not invade, we're going to be looking for price to do just the opposite. I hope you can understand that. All right. Let's look at the 4-hour so you can get this picture. All right. If Russia invades, we're going to target, this is your target at 1.1408. 83, excuse me, 1.14083. All right. This would be your target for a bullish run. If Russia does not invade, we'll be looking at this as a first target and this is a second, all right, to take out these highs. If Russia does invade, we're going to be set yourself a target for these equal lows. And I set that target because we have a lot of activity at this level. So we look to take out this bullish, this demand zone here. You understand? I hope you do. All right. If you have any questions, please leave a like and a comment. Leave a like and a comment. All right. Leave a like and a comment down here. You know, where to leave the comments in the comment section. Okay. But that's my outlook here. You can see the hint here. As soon as we got the announcement, we saw the bearishness come into this market. All right. People are trying to flee to that USD safe haven. So we can see a continuation of that if Russia does, in fact, go ahead and invade. All right. I'm going to move on to the next pair. EURJPY. This is the euro against another safe haven. What do you think my outlook is? It's going to be very much the same. All right. All right. You can see on the weekly that price swung low, swung high. All right. We didn't break that high, so this becomes a lower high here after we make a break of structure. Right. Easy enough to follow. The break of structures to the downside is we have a bearish break of structure. All right. What happens after? What do we expect after a break of structure? A return to impulse, and that's exactly where price went, right to the impulsing order block that sent price to break the structure in the first place, and we have a bearish reaction. Now, let's go to, why is this showing up here? Let's go to this isn't supposed to be showing up. I'm sorry. I should have had this figured out before. Why is it still showing up? Okay. All right. There you go. Did I do this wrong? I think I did. Yeah. All right. I'm sorry. I beg your pardon. Okay. So on the daily, Euro USD, we're making lower lows, lower highs, lower low. This is actually a lower high. All right. Actually, you can put this in a channel if you like, and you can see. Oh, man, I thought I had this figured out. All right. Well, okay. I guess I don't have this figured out. Why won't it? Oh, I see. I see. I, I'm losing it. Let's do it this way. Okay, I can't even do it this way. I don't understand what the problem is. What in the world is going on? Okay, so I'm looking here, and you can see that we formed this channel here. All right. I'm not big on a lot of magic trend lines and whatnot. All right, but that one seems pretty obvious, right? So I'm expecting further downside action here. You see the bearishness that came into this market, especially after what happened with the announcement by the Biden administration. I'm expecting more bearishness to enter. I expect the yen to pull price down if Russia does invade that market. I mean that country. Okay. So if Russia does not, I expect bullishness. Look, we broke this high. All right, we broke this high. This isn't a structural high. This is within this. You got to see this in order to understand it. I don't know what's wrong with me. This is the breaking of this low to make a lower low. All right, this is the lower high here. Okay, if Russia does in fact invade, this will be our target down at 128, 238. And if Russia does not invade, I believe this high will be broken. It'll become a liquidity point because it did not make a new low. This is a weak high if it doesn't create a new low. Very, very much like this. This is a strong high because it created this low. It created a new low. Strong highs, you can trade. You can trade off of. If you took that short from here, you would have been good. You understand? All right. This didn't create a new high yet. All right. It created we have this here. All right. This here is you know, a swing high, a swing low within. It's more like a what do you call it? Intermediary high, higher low, because it's within this trading range. All right, until price breaks this high, we are still bearish. No, until price breaks this high, excuse me, we are still bearish. Until price breaks this low, you know, if price breaks that low, we're just confirming and continuing the bearish momentum. You understand? We can come all the way up here and then break this low, you know, for price to continue bearishly. I hope I didn't confuse you, because I know sometimes I can sound like I'm breaking, I'm confusing people. We have a break of structure to the downside here. What do we expect? A little pullback, right? A little pullback, a bear flag, if you will. All right, probably going to hit somewhere around here because there's a lot of fair value gap, a lot of imbalance in that move. So we might come back and then continue down. That's if Russia does invade. If Russia does not invade, then we're going to see more price action to the upside. And I'm looking for price to, what are we? Oh man, I'm looking for price to hit this target up here. Let me see something here. I got you covered. I got you covered. All right. Bullish. And that'll be our bullish target at 133, 484. If Russia does not invade. If Russia does invade, our target would be 128, 238. Got it? Good. For God's sake, I'm moving on. All right. Let's go to Euro Swiss. Euro Swiss. What am I expecting with Euro Swiss? Let's look at the weekly. What do we got? We have low, 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 high, low, low. Look at that. We broke that high there. All right. We should be going bullish, right? No. We broke that low. Break of structure. That means we've turned bearish. All right. We turned bullish up here. No doubt about it. but price decided to turn bearish. And we had the pullback after a break of structure. Where do you expect? A pullback, a return to impulse, and then further downside action. So that's what we got on the weekly. Let's look at the daily. All right. We can see the break of structure. Where is the last break of structure? Well, we hit this weekly demand zone here that was created here, respected, whatever. All right. And we see that we made a low, a lower low. We broke structure to the upside. We broke this pullback, that swing high to the upside here. All right. Which gives us our hint that price may be turning, maybe shifting from bearish to bullish momentum. We come back down, we make a lower high, right? We make a lower low, excuse me. We make a lower low, right? And we come back up to the swing. If the swing point is broken, then we know we're turning bullish. And that's exactly what happens. And we come up and take all the liquidity from that point, from this point here, the relative equal highs here, and we have the pullback in action now. Now, what are we expecting from this point? Euro, Swiss. What are we expecting from this point? If Russia does invade, we're going to see, you see how we're already started bearish? That's going to continue. All right. The Swiss will bring the euro down, because this is euro is a risk on asset, right? All right, so our target would be 1.04355 right here. That'll be our near side target, and that's if Russia goes ahead and does this deed, right? If Russia doesn't, we're going to see strength in the euro against the Swiss, and we'll target at 1.06 thousand. Got it? 1.06 thousand. All right. That's if Russia doesn't invade. All right. This will be our immediate target. I suspect we'll be taking out this this demand zone. I do believe that there's a chance we will be taking out that demand zone, but for our first target, I'll be looking right around here, because we have this fair value gap to fill in, and I can see price coming down to test this area here, and then we'll see what it does once it gets here. Okay, but I believe we may be taking out this weekly demand zone. All right, let's move to the next one. All right, pound USD. Let's look at the pound. All right, it's going to be pretty simple. We see the bearishness in this market. I think it's pretty fair to see lower lows and lower highs, right? We are in this supply zone. Price is responding to that supply right now. I don't have it marked because it's not necessary. Come on, man, what did I just do? All right, and coming across here, you see how price responded here, and we created another supply zone here, right? On the weekly. On the weekly, we have another supply zone there. Come on, man. We have another supply zone here. I'm driving myself crazy. All right. If I can just get that here, that's a weekly supply zone here, and we can see how prices are all up in that, right? So we have what we're establishing is who's in control. Supply is in control. Sellers. All right. We have some lows, some relative equal lows down here for price to target. That's going to be a magnet to price. Let's go to the daily. All right. On the daily, this is the swing. This is the swing high, right? But it is a lower high in the structure. All right. We have the pull down here, and we have a lower high being made inside this supply that was created on the daily. All right. So we are just seeing that the sellers are still in control here. Now, in regards to the imminent invasion, all right, what are we looking at? Well, look, I want you to see that price took out this high here. Took out this high here for liquidity. Came back up into, after reacting to this supply zone. All right, price fell, breaking structure to the downside, and then we came back up, taking out that high. Interesting, right? That's interesting price action. All right, but we're still respecting the high of this order block here. Okay, so what was the response? We fell, came back up, and created this bearish engulfer here at supply. Now, we see that this is on the 4-hour. We can see that this was a bearish response to the announcement. What are we expecting? Further downside action if Russia invades. We have a target of 1.33726. All right, 1.33726 if Russia invades. If Russia doesn't invade, we have a target of 1.366429. All right, to take out that high. All right, and that'll be the immediate target. We have other targets to set, but this will be the first one. All right. Next, let's go to pound yen. Pound yen. All right, what do we have here? Similar situation. Oops. Okay. So you can see that we had a very nice bullish run. All right, higher high, higher low, higher high, higher low. Did we break this low here? Yeah, we took that low out here. All right, we make this higher high here. Great. All right, so it looks pretty bullish until we had this response. All right, so what was responsible for this high? Right here. This is responsible. This low is responsible for that high. Okay. Once we break that higher low, then we're breaking structure. Did we break that higher low? Let's take a look. Oh, I thought we did. We came very close to it, but we didn't. We respected that low. All right. So that's very interesting to me. Why? Because we didn't break the low. So this becomes a weak high, which means it becomes a target for liquidity. Aha. All right. So as price comes back up here, right? It comes back up here. We're testing inside of the supply area up here. We can see the rejection here, and then another pass breaking these highs, breaking the relative equal highs to get up in there. Okay, so what are we looking at? Is this a bullish market? Where's the last break of structure? The last break of structure is this high, because this was a pullback. All right, this was a pullback. Let me see something here. Wait a minute now. See this? I'm confusing myself. This high was not broken yet. All right, not yet. This is our trading range that was never broken. The low was never broken. So after breaking this high, we were bullish, right? Price didn't make a lower low. It never broke the original trading range to turn bearish. So we're still bullish here. We're still bullish. Technically, we are still bullish. Sorry for the confusion. I'm sorry. All right. So let's look on the daily, and let's see what we see. We have this high. All right, and we know that prices establish relative equal highs. This is going to be a magnet to price. Absolutely. All right. We created this swing point here that was broken. We created this liquidity swing point here. And some people are going to look at this as inducement to get people to take shorts early, only to have themselves taken out by the markets or by liquidators, taking out these stop losses up here, right? we have a supply zone right there where price is responding to. And we have a bearish reaction to it. We saw that this day was bearish, right? We want to make note that this was a bullish week, all right? But we saw the introduction of sellers here trying to wrest control. So let's go down to the 4-hour. And what do we see? We see we're above these highs, all right? We're above the inducements here for this zone of supply. We see that we have a bearish reaction here. Boom. All right. What we can say is if Russia invades, we're going to see more of the same. We're going to see bearishness continue, and our target will be 155.456. That would be our first target, because we have supply here, and we'll wait to see how price reacts to this supply. And you can see the target is chosen because there's a lot of activity on this level, all right, where price has been used for both support and resistance, right? Now, if Russia doesn't invade, we're going to see a continuation of that bullish reaction, and we're going to take out these highs. All right. Why would we take those highs out? Because they're weak thus far. All right. Thus far, they're weak. All right. Insofar as they haven't broken the swing low. All right. This isn't a swing low for me. All right. This is one leg of structure here. This is the swing low. All right. So we break that higher low, then we're confirming a bearish trend, bearish shift from bullish momentum. Okay. On the lower time frames, yeah, this will be a break of structure here. All right. But on the higher time frames, this is the one that really counts. This will be an earlier sign that price is switching momentum. Now you see that we have a wick below that structure point. We have a wick below that. That's usually, for me, it means a liquidity grab as opposed to a break of structure. I want to see a close below. I want to see momentum break that low. Okay. Now, I was quick to say that on a lower time frame, that's a break of structure instead of on this time frame. But if it's at least 40 pips on the 4-hour, yeah, and this is 67, this is a break of structure on the 4-hour. I'm sorry. Again, I got to get my mind right. Yeah, so I like this as a pullback. I like this as a swing point, a higher low, a higher high, and a higher low, and a breaking of that swing point. So with a break below it, we'll confirm the bearish momentum. Okay, we have our targets. Let's move on to the next pair. If I can get through this, USDJPY. What do we see on USDJPY? Okay, if we go to the weekly, what are we noting? I got a mark up here. I'm not sure what that's for. All right. We can see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. All right, and here we are in between this swing high and this swing low. All right, we're in the middle of that trading range. We have relative equal highs above, and that's looking good. So we're bullish here, right? Would you agree? Leave a comment and a like in the comment section. Okay. Now on the daily, what do we see? All right, I just want to make note that we finished the week bullishly, but look how the sellers came into that market. Very strong, right? On the daily, we closed that day in a bearish way, but we see that the buyers are putting up a good fight as we hit this zone of supply here. I mean, of demand, excuse me, of demand here. So we're getting a reaction off of this daily demand, but price is very close, leaving this these relative equal highs up here. Price is pretty close, man. That's very interesting to me. After we're making a higher low, a higher high, a higher low, I'm expecting a higher high to be made as far as expectational order flow is concerned. The expectational order flow is bullish. All right, it is not bearish. All right, let's look at the 4-hour. And what do we see? We see this big reaction as we hit this higher time frame zone of supply here. All right, and we can expect, because it was bearish, we can expect with USDJPY that we're going to continue bearish if Russia invades. If Russia doesn't invade, and that'll give us a target that we can a TP that we can a zone that we can target at 114.20 to 287. Please excuse me, it's late for me, and I've been up for quite a while. 114.287. That'll be the target if Russia invades. If Russia doesn't invade, we're going to see this pullback continue to the upside, and we're going to take out these relative equal highs here at 116.351. Okay, very good. Let's move to the next one. Oh, we got quite a few to do. Aussie USD. Aussie USD. I'm going to make sure that I timestamp all of these, okay? So you can get through them a little quicker. On the weekly. On the weekly, I need Red Bull or something. Red Bull gives you wings. All right, so we can see we've been getting weaker here with lower lows, lower highs. Looks like we broke that high. It looked like we should be bullish here, right? Wrong. We broke that low, broke that low. So we are definitely bearish. Those will that breakup structure is definitely bearish here. Okay. We pull back for the correction, a return to impulse, if you will, and continue bearishness. All right. Let's go to the, so we're bearish there. We'll go to the daily. If I could just stop making those independent markings and driving myself crazy. All right. We see that this was a break of structure on the higher time frame, right? We come down here, but on this one, it looks like a stop hunt. All right. We just took liquidity and we're traveling back up. But this, once we make a new low, then we're looking for a lower high, right? Because we're bearish in this, we have bearish structure here with a lower low after this break of structure here. After this break of structure here, we are looking at this swing high and then a new swing low. Okay. That makes sense. So we are in supply. We have a very bearish reaction there. All right. And so we are still bearish in this market. Let's go to the 4-hour. And what do we get? What do we see? Look how bearish that is. All right. That was during the once we got the announcement that Russia may in fact invade. We can continue to see the US dollar strengthen against the Aussie if Russia does invade, and we have a target of 0.69949 down here. All right. If Russia doesn't invade, I didn't set a target up there. I thought I did. Let me see something. Is this supposed to be my target? I believe, yeah, that's it. Okay. So we can see how bearishly the reaction was once we did reach supply here, right? And we see that price broke these lows, short-term lows here, broke these short-term lows here, and we're looking very bearish here. We're looking very bearish. We have a pullback as a correction. All right. Broke that low, broke that low. We're looking for a return to impulse. That's exactly what happens. And we can expect further downside. If Russia invades, we'll see a strengthening coming to the US dollar against the Aussie. And we have our targets set and ready. Why is this not green? I said bullish. I don't understand how that happened. Okay, so that's what we're looking for. All right, and we're going to target these lows, or we're going to target that high. Next, Aussie yen. Aussie yen, we got the same situation. Same situation. All right, we just go to the daily. We can see price was making lower lows and lower highs. Right, we can see that we come down here, setting up some near equal lows, excuse me. Let me see if I can get that on, get that right on. There it goes. All right. And we know that's going to be a target for liquidity. All right. That's right before, and that's what you, that's something that's an extra tip. That's something that you want to see as price heads into a zone, a supply or demand zone. You want to see inducements. You want to see liquidity being swept on the way to a demand or supply zone. Okay, that's just an aside for you. Okay, so we're on the daily. All right, we see the pullback here. We see the response to demand. I mean, to supply. Why I'm getting that mixed up. All right, and that was a very strong response. Okay, let's go down to the weekly. No, let's go down to the 4 hour. All right, and what do we have here? You see that price. You thought that price may react here, but this acted as inducement. What was that inducement? What was that inducement? All right, inducements are for people to take shorts early, only to have price come back and take those stop losses above those areas out, right? You see that price is finally made it back up to supply. We see the response to it. Boom, we're breaking short-term lows here. Another short-term low here. You know, once price starts breaking short-term lows or structural lows, actually this one looks like a structural low as we make a lower high. This is going to be important, but you expect price to pull back and then continue lower. What are we expecting with Aussie yen? On the 4 hour, I have no targets. All right, we'll make the targets now. You see the relative equal lows here that I had pretty much pinpointed. I don't know what happened there. All right, so we're going to set this as our bearish target. If Russia invades, 80, 388, 80.388, and our bullish target. Our bullish target will be, I think I already have that bullish target. Okay, yeah, this was it here. Bullish target right here. All right, this will be our bullish target. If Russia does not invade, we're going to see the yen gain a lot of strength against the Aussie if Russia decides to invade. Next, Aussie Swiss. How did I get there? Aussie Swiss. We have the exact same situation, really. All right, we see that price is responding to the supply here, and we broke that swing low. All right, so we're looking for if Russia does not invade, we're looking at a target of 0.67045. We're looking for price to go up if conditions with these Russia and Ukraine improve. All right, there's a meeting happening this Saturday. So, we'll see what the outcome of that is. But if Russia invades, look to hit target 0.65115. All right, we're going to take out these lows, these relative equal lows here, and we'll be in a zone of demand starting right here. Okay, so look for that. Shall you? Shall? Yes, you shall. Okay. Next, one more. NZDUSD. What are we looking for? Let's go to the weekly. We can see easily how bearish we are from this high. Come on, man. From this high. From this high. Lower low, lower high. Lower low. Just a swing. Then we break that high. You think we're going bullish? Yes. We make a higher low, a higher high. Hey, we're bullish. We're bullish. No, we're not. We're breaking low. We're breaking low. We broke structure to the downside. Broke that low as well. That swing low. Then we can see the bearish momentum continue. So we're bearish on the weekly, right? Easy enough to see. All right. I want to also point out there was a zone of demand here that we broke through. What you want to do, this is my tip. Got to listen to tips, man. This is my tip for you. When we come to a zone of demand, you want to look for the reaction to it. This is the reaction, right? What is the extreme of this reaction? Where it went to the highest point here, all right? Why? Because if price does in fact break this demand with a close below it, this becomes tradable, and you wait for price to come back up in this zone of supply. Okay, once price comes back up into the zone of supply, you're looking for a trade to take down. That's from me to you. It works the other way too. This is called a flip zone. A flip zone is when demand turns into supply, or vice versa. Price comes back up here. That's a high probability short. Understand? Good. All right, let's go to the daily. All right, and what do we see? We just see that bearish leg, impulse, correction, and we see the new impulse starting from the supply zone here all the way down, right? So let's go to the 4 hours so we can see this price action a little bit more clearly, right? We see price work its way back up into the zone of supply here. All right, this is a 4-hour supply zone. Will it hold? It seems to be holding pretty well. From here, we broke this swing low, all right, and we're broken this low, these lows here, all right. We took the liquidity up here. We see after a break of this low here, we see the pullback to a return to impulse, a return to origin, and the origin of this impulse is right up here, right? How do you know that? Because this is where it went. Come on, man. Work with me, not against me. Okay, so you see how the 4-hour ended, right? We're looking for further downside action if Russia continues with this mess and turns it into something crazy over here. All right, with the Ukraine. All right, and our target will be 0.65428, 0.65428. All right, if tensions are relieved, if conditions improve, look to target 0.67325. Okay, and that's it. I hope with the length of this doggone video, you found it helpful. Leave a like, leave a comment. Tell me if you have a contrasting view in any of the markets I covered, or if you have a request for a market that I didn't cover. If you want me to look at it, leave it in the comment section, okay? Do not forget to subscribe to this, my channel. Why? Because you don't want to miss the updates. You don't want to miss the new analysis. You want to make sure you check the community, the community tab in my channel, because I'm going to leave messages there relating to updates and what's coming out, or maybe some polls or whatever. I'm going to make more use of that, and that'll be my way to contact you. Okay, to stay in touch with you, and I need your feedback, so leave that in the comment section of this video. All right, do not forget to give me a like or a subscribe, because that helps build the channel up. It helps me to build my channel up. It helps with the YouTube algorithm. Okay, that's important to me. All right, and that's all I ask of you. If you like free education, free training, free tips on the markets, and I'm hoping that you appreciate the work I'm putting into this. Okay, I hope that you have a great and profitable trading week. For the next 2 weeks, I'm letting you know it should be pretty good. All right. Not, we'll see how this Ukraine and Russia thing settles out. Outside of that, I'm hoping that everybody just makes profits. And if you do make profits, if you do make a good trade, you make sure you leave a comment about it, because I want to hear about it so I can pump you up. Okay, I'll see you in the next video, and thank you for being patient with me.